On Business Incorporated today, IMF retains 2.5% growth estimate for Nigeria. And after 2 years of 3 digits, Zimbabwe inflation drops to 56%. US revives Trump's Africa Business Initiative with focus on energy and health. Hello and welcome to the program. I'm Chimeze Obi Iwago. We begin with intraday market numbers, and here on the African continent, sentiment was mostly negative amongst the markets we track. Aside from the JSE index in South Africa, which gained 0.69%, the others were in the red. Nigerian index was down marginally 0.02%. In Egypt, the EGX30 was down 0.76%. Kenya closed in the negative on Tuesday. And in the Middle East, sentiment was mostly positive at intraday. The markets in the UAE went sideways, while the Abu Dhabi market was up 1.02%. Dubai was down 0.35%. In Saudi Arabia, the Tadawul index was up 0.03%, while the Qatari index also rose by 0.37%. In Europe, markets edged higher in the morning amid a busy day for major corporate earnings, while investors awaited a key policy announcement from the U.S. Federal Reserve. For more, let's talk to Chelsea. Hello, Chelsea. Good afternoon again. Well, it's a huge day for earnings in Europe with Deutsche Bank, Barclays, British, American Tobacco, GlaxoSmithKline, Rio Tinto, BASF, and Santander publishing results. And of course, Germany lender Deutsche Bank swung to a profit in the second quarter as it recovers from the pandemic. How are these results going down in Frankfurt?
Well, these were some pretty strong results from Deutsche Bank, which has a very long and complicated history in the past years. It's been seen as the problem child of European banking. It's lost a lot of money. It's been really pushed to the brink. It's been in the midst of a 2-year-long restructuring, and it does seem that we are starting to see that to some degree pay off. In this quarter, Deutsche Bank did benefit in large part from the fact that many of its clients are starting to recover from the pandemic blow. Deutsche Bank had last year set aside more than 700 million euros in case its clients started to default on their loans. They don't seem to be doing that, so Deutsche Bank was able to take some of that money that had been setting aside and put it back to good use. If you look at the revenue numbers, they are a bit softer. We did see revenue slip in this quarter as well. Investment banking and corporate banking revenue were also down. So it's a bit of a mixed outlook from Deutsche Bank, but they do appear to be coming forward with this restructuring. And what we heard from executives today is that this shows that they are capable of reporting sustainable profits.
New survey released today showed that German consumer confidence is stagnating. Why is that?
So this report really points to the coronavirus as one of the main concerns. We're also seeing this, I'd note, among businesses as well. Confidence in the economy, confidence in the future is starting to get a little bit murky as the case numbers rise here. This report from the German research think tank GfK, did show that consumers, they are still pretty confident, but they're not getting any more confident than they were. They do have slightly lower expectations for their own income, and that's partly due to rising inflation, which we're seeing really cut into people's earnings around the world. But a lot of this is really concerns that Europe might have to reinstitute certain restrictions, certain lockdown measures once again if we continue to see this rise in virus cases.
The floods that have devastated Germany in recent weeks could cost the insurance industry $5 billion. That's according to a new estimate. Break this down for us.
So this estimate is coming from a U.S. company that comes up with research estimates based on basically extreme weather events. They looked at the rainfall, they looked at the areas of Germany that were hit by the flooding, and they do think that it will cost around 5 billion euros. That's specifically for buildings, for companies, for people that were insured, and only a small portion of these areas and people in those areas that were impacted actually had insurance. So that's really a small part of how large the cost to recover from this will be. We've also heard from the government that they will bring forward about 400 million euros worth of aid for the areas that have been hit by these floods, but they've also indicated that the total cost could span into the billions of euros for them as well. And Deutsche Bahn, the rail operator here, has said that they have seen damage over €1 billion. So we're looking at certainly damage in the multi-billions of euros, though it's still not entirely clear how extensive the damage is.
All right, Chelsea, thank you very much for updating us this intraday. Enjoy the rest of the day. And in the UK, senior cabinet ministers are to discuss allowing fully vaccinated travelers from the EU and US to avoid quarantine when they arrive in England. Let's get the details and more from Juliana. Hello, Juliana. Good afternoon. Well, the government is set to approve changes today which will see the UK open its doors to double vaccinated tourists from the EU and US. What are the plans on ground?
Any information today, but hopefully by the end of the week. And according to people that are close to the matter in the airline industry here in the UK, this announcement could be coming imminently, and this does affect US and EU travelers, well, some US and EU travelers, because of course they've got their own domestic policy guidance. So at the moment, in fact on Monday, the White House did confirm that the travel ban to the UK and the Schengen zone is still in place. Remember, that was imposed under Donald Trump's administration in March when the pandemic was really at its peak. But of course, the British airline industry has been in absolute tatters, and they've been desperate for Grant Shapps, the Transport Minister, to open up travel. We have started doing that. We've got a traffic light system running at the moment: red, green, amber plus and green. France at the moment is on the amber plus list, so even if you're fully vaccinated, if you're travelling back from France into the UK, you still have to quarantine. So there are still hurdles to go through. With the EU, it should be much quicker because they've got this digital health pass, which I believe has been in place since the beginning of July, and that's all in a digital computer, so it's going to be much easier for customs and the border control to get people through. However, in America, it's all paper-based. Each of the 50 different states have got their own system of doing it. So it's difficult. But of course, you know, UK, Washington, UK, New York, that is a very, very profitable, lucrative travel corridor. Bosses, businesses have been desperate for it to be reopened. So fingers crossed this will take place. And I'll make sure I update you on the show, Chimney.
Absolutely. In the meantime, the pound hit the highest rate against the euro since early April this morning. Following this news, is the equity market also moved by the plan to end the amber list quarantine?
Oh, absolutely. It was pretty much a subdued start in the FTSE All-Share this morning following the lows we saw in the Asian markets. But once this news broke, we're seeing a massive rally. I believe the FTSE gained about 15 points. All of the major travel and tourism related stocks are up. The British Airways owner IAG, they're up by about 4.83%. The budget airlines Wizz Air, I believe that's up about 6 to 7%. EasyJet, they're also up by near 5%. So there's a good set of momentum. And of course, everybody is waiting to see what Jerome Powell and the rest of the Federal Reserve will have to say about asset purchasing and inflation. So at the moment, the FTSE All-Share is up 0.30%. The FTSE 100, that's also up by 0.19%. And the FTSE 250 is up by 0.84%. In the currencies market, the British pound slightly down on the US dollar by 0.03%, just up on the euro, though, by 0.03%, and up on the Japanese Japanese yen by 0.11% at intraday.
And annual house price growth in the UK has cooled but remains in double digits. That's according to Nationwide Building Society this morning. So what factors are driving this decline?
Yeah, it's an interesting discussion. So year on year, house prices are still way higher than they were. So I believe year on year, they're still up by about 10.5%, still very, very expensive to buy a home in Britain. I always say, if you want to live in London, you're going to have to double your money. But according to Nationwide Building Society, month on month, we have seen a slight drop. This is the first drop we've seen in a few months. Month on month, it fell 0.5%. And this has all been put down to stamp duty. In March, in last year, October, I believe, Rishi Sunak, the Chancellor, took away stamp duty on properties up to £500,000. If you buy a property up to £500,000, you don't have to pay the tax on it, which has been a real struggle, particularly for first-time buyers. We saw lots of people flooding to the housing market. That came to an end in June, and now, of course, we're getting the first data for July, and we see that has made a difference because it does cost more money. Stamp duty exemption does still apply for lower price properties up to about £250,000. But according to the data we've seen, people are looking for larger properties, and that's one of the reasons why we are seeing this fall. But lots of observers say there is still reason to be cheerful. The market is still doing very, very well. There is a shortage of homes. People are still reassessing their life goals and where they want to live with their family. So we are still going to see the uptick, but this is the first time we are starting to see that perhaps this bubble may burst sooner than those in the industry would like to see.
Well, I'm sure the Fed should be about now addressing on their policy outcome, and hopefully tomorrow we will dwell on that. And shares in Asia Pacific were mostly lower on Wednesday, with stocks in Hong Kong seeing a partial bounce back from a two-day rout. The Hong Kong Hang Seng Index closed 1.54%. That followed a more than 8% decline over 2 days earlier this week, triggered by regulatory fears over sectors such as technology and private education. Chinese tech stocks in Hong Kong, among the hardest hit in the recent sell-off, rose on Wednesday. Mainland Chinese stocks closed lower. The Shanghai Composite fell 0.58%, while the Shenzhen component declined fractionally. South Korea's Kospi closed 0.13%. The S&P ASX 200 in Australia dipped 0.7%. In Japan, the Nikkei 225 dropped 1.39%, while the Topix index slipped 0.95%. And in the U.S., stock index futures were mixed during early morning trading after the major averages pulled back from record highs, snapping a 5-day winning streak. The busiest week of earnings continues on Wednesday with Pfizer, McDonald's, Qualcomm, Facebook, Ford, and PayPal among the names on deck. The Federal Reserve kicked off its 2-day meeting on monetary policy on Tuesday. The Federal Open Market Committee will about now release a statement followed by remarks from Chairman Jerome Powell during a press conference. And oil prices climbed in early trade today after industry data showed U.S. crude and product inventories fell more sharply than expected last week, reinforcing expectations that demand will outstrip supply growth even amid a surge in COVID-19 cases. U.S. West Texas Intermediate crude futures rose 43 cents to $72.08 a barrel, reversing Tuesday's 0.4% decline. Brent crude futures rose 38 cents to $74.86 a barrel after shedding 2 cents on Tuesday in the first decline in 6 days. Data from the American Petroleum Institute Industry Group showed U.S. crude stocks fell by 4.7 million barrels for the week ended July 23. Gasoline inventories dropped by 6.2 million barrels, and distillate stocks were down 1.9 million barrels. And after the break, IMF retains Nigeria's 2.3% growth forecast for 2021. This and more in a moment. The International Monetary Fund is forecasting a 2.5% growth for Nigeria's economy for 2021, retaining the initial projections made during its 2021 virtual spring meetings in April. This is contained in the institution's World Economic Outlook for July titled Fault Lines Widen in the Global Recovery, released on Tuesday in Washington, D.C. According to the report, the slow rollout of vaccines was the main factor weighing on the recovery for low-income developing countries, which Nigeria is part of. It also retained its 6% growth forecast for the global economy for 2021 and 4.9% in 2022, adding that though the global forecast was unchanged from the April 2021 World Economic Outlook, there were offsetting revisions. And in Ghana, the central bank on Monday held its main interest rates at 13.5% after having cut its by 100 basis points in May. The bank's Monetary Policy Committee held the rate after determining that the risk of inflation in Ghana had broadly balanced out. Inflation in Ghana has declined in recent months from 10.3% in March to 7.5% in May. Rates have, however, largely remained within the bank's targeted band of 8% plus or minus 2 percentage points. And the International Monetary Fund, in its recent Article 4 consultation, expects Ghana's economy to rebound to 4.7%, with economic island is expecting the country to become the fastest growing in sub-Saharan Africa this year. However, some critics say Ghana's rising debt may put the economy in crisis. Joining me now to look at some of the issues is the founder, Bespoke Business Consulting in Accra, Ghana, Alabi John Kennedy. Thank you very much, John Kennedy. Mr. John Kennedy, for joining us on the show. Good afternoon.
Good afternoon. Thanks for having me.
Well, this week we saw the government impose further restrictions as a result of the rising COVID cases. And on Monday, the Monetary Policy Committee set the tone of monetary direction in the next 2 months by leaving rates unchanged. How are businesses and the markets digesting these events?
The effects of the COVID-19 over the past 7 weeks has shot up to an average of 420 cases over the past 7 days. And as of today, it has increased to almost 424. And this is a bit worrying for the players in the economy. Now, this also has found its way to affect businesses and affect how things are done in the country as it is right now. Basically, people are not really so enthused about the effects of the COVID-19 and how they feel the positivity of the changes in the business in their pockets. For instance, on Monday, when the MPC did maintain the 13.5% MPC rate, people don't really understand it. We are trying to find ways and means to make them understand that this is to help the economy to grow over a period of time. And possibly, when inflation goes down below how it is right now, it can change in this way or make a positive effect on the economy as a whole.
Yes, while most of Ghanaians are really not happy with the management of the economy by the present administration, the IMF on its own, after they concluded the Article 4 consultation with the government of Ghana, is projecting the economy to grow by 4.5% this year, the fastest in sub-Saharan Africa. And then on one side, you're now having critics amongst you there saying that Ghanaians are suffering owing to the Nana Akufo-Addo's mismanagement and not necessarily COVID. So how do you place this together?
Okay, so basically, looking at what the IMF has said, yes, they have a point. But on the economic side, how you calculate these things does not really have a direct effect on the pocket of the businessman. A businessman, which most entrepreneurs, have like 70%. They actually run the economy of Ghana. They have 70% of the total economic shakings of Ghana. So they are not actually feeling that in their pocket. That's why you see a kind of very responses to this. However, I believe that the government is trying to take a medium to long-term measure to make sure the economy is stabilized and put the economy in the right track for future growth. They don't want to use the same short-termism to achieve a short-term result and later to affect the economy. So we know things are hard, things are a bit difficult, but what the people are saying is that they want to feel it on their pocket or in their bank account But this will take a while. It's not going to happen overnight. And we are trying to make them understand this aspect when you discuss with clients and other business people. So hopefully they'll get it, understand it, and be able to face that faithfulness, faith in the government.
And then from your perspective as someone who have been following the economy and have monitored the developments there in the economy, we've seen oil prices tick up. What is your outlook for the economy?
Basically, the major income for the economy of Ghana is such that it's not based on petroleum. We actually produce about 170 to 200,000 barrels per day, and these are just a fraction of the source from which Ghana generates its revenue. So yes, in the income side, well, governments might earn more revenue as prices of crude oil goes up. However, in the expense side, they also spend more to import fuel because whatever they are producing cannot actually be enough for even the locals, not talk of any other foreign organization. So what we are saying here is that even though from the income aspect you get more benefits, but from the expense aspect you would actually lose because you're actually spending more than you expect. So what the government needs to do now is to make sure that they're able to produce more barrels of crude oil so that they can balance up and be able to strike a balance between their income and their expenditure. Most of the income generated are generated through other revenue generating activities, other taxes, not oil. So it won't really affect the economy of Ghana. But when they're able to balance by producing more crude oil, they're able to get more revenue to be able to balance up on the expense side.
All right, thank you very much for your time with us on the program, Alabi John Kennedy. We do appreciate it. Well, before we go on to other stories we have on the program, well, we have our correspondent in Abuja following the Supreme Court judgment on the Ondo governorship election. We have Gloria Omezoke there to update us on what's happening. Gloria.
All right, so we're here at the Supreme Court. The Supreme Court has gave dissenting and minority judgments in the suit filed by the APC, the PDP governorship candidate of the Ondo governorship election. And so 4 judges upheld that it actually lacked merit, and given the argument that the governorship candidate, or rather the APC chairman of the caretaker committee, and who is also the governor of Yobe State, was not in breach. And they also upheld that even though he was not listed, even though he was listed as a part of the suit. Okay. Yeah, so the 4 judges, actually, the 4 judgments, the dissenting judgments upheld that the APC caretaker chairman was not listed as a respondent in the suit. But the minority judgments listed that even though he was not a respondent in the suit, that he was his presence in the court was not even viable, was not necessary, because APC was listed as a respondent. And so this judgment was in favor of Governor Akeredolu Rotimi. And today, even the appellant right here has accepted defeat and talked about how much he knows that his petition really was not lacking in merit, and that the other judges who stood by him were really upheld justice, and that is the way to go.
All right, thank you very much, Gloria, for updating us on that. I'm sure we'll follow up on subsequent bulletin. And finally, on Business Incorporated, Zimbabwean inflation slowed to double digits in July for the first time in more than 2 years. Consumer prices declined to 56.37% from a year earlier, compared with 106.6% in June. The last time the Southern African nation's inflation rate was not in triple digits was in May 2019, Costs climbed 2.56% in the month. Inflation started spiraling out of control towards the end of 2018 and peaked at 837.5% almost 2 years later. The acceleration was largely due to a number of missteps that led to a cash scarcity in the country. Its currencies comprising bond notes theoretically pegged to the dollar and an electronic currency known as RISCs, mostly used for commercial transactions, plunged. The parallel system was scrapped and replaced by the reintroduction of the Zimbabwean dollar in 2019, a move last year to allow the exchange rate to be set by an auction system instead of a fixed peg to the US dollar has helped stabilize the currency and bring price growth down. The central bank sees inflation slowing to below 25% by year end. And the Biden administration has announced a new push to expand business ties between U.S. companies and Africa with a focus on clean energy, health, agribusiness, and transportation infrastructure on the continent. U.S. industry executives welcomed the interest but said dollar flows will lag until the administration wraps up its lengthy review of Trump administration trade measures and set a clear policy on investments in liquefied natural gas. President Joe Biden, who requested nearly $80 million for the initiative in his budget proposal in May, aims to focus it on women and equity with an expanded role for small and medium-sized businesses. The administration's goal was to reinvigorate Prosper Africa as the centerpiece of U.S. economic and commercial engagement with Africa. And that's it on the program. Thank you for watching. I'm Chimeze Obi Iwagu.